The Rise of a Gold-Denominated Energy Market, BRICS Plus and the Gold Standard. Introduction. For decades, the US dollar USD has dominated global trade as the world's primary reserve currency. It has underpinned the pricing of key commodities, especially oil and gas, and shaped international financial systems, influencing the flow of capital, trade, and economic policy worldwide. However, the USD's position has also made it a tool of geopolitical leverage for the US, prompting some countries to seek alternatives to reduce their dependence on a currency subject to US domestic policy and economic fluctuations. One such alternative gaining traction among the BRICS Plus countries, Brazil, Russia, India, China, South Africa, and allies, is the idea of a gold-denominated energy market. This approach, they argue, would provide a more stable and predictable framework for international trade and energy transactions, free from the volatility of fiat currencies like the USD. A shift to a gold-backed system would not only redefine global economic relationships, but also reshape the power dynamics of international politics. Historical context and motivator. A historical comparison between the purchasing power of gold and the USD relative to Brent crude oil from 1900 to 2024 illustrates the volatility of fiat currencies versus the relative stability of gold. The data shows that while 1 gram of gold could purchase 0.55 barrels of oil in 1900, it now buys approximately 1.14 barrels in 2024. In contrast, the cost of a barrel of oil in USD has skyrocketed from $1.19 in 1900 to $70.73 in 2024. This significant increase reflects the long-term depreciation of the USD and the effects of inflation, economic crises, and monetary policy changes over time. This chart demonstrates that gold has been a far more stable store of value over the past century. As a result, some countries view gold as a more reliable benchmark for pricing energy and commodities, especially in a world increasingly characterized by geopolitical tensions and economic uncertainty. The idea of a gold-denominated energy market would eliminate much of the volatility associated with fiat currencies, providing a stable foundation for long-term economic planning and international trade. Strategic positioning of BRICS Plus countries. The BRICS Plus countries, particularly China and Russia, appear to be strategically positioning themselves to capitalize on this potential shift to a gold-denominated energy market. China, for instance, has moved aggressively to control the supply chains for rare earth materials and critical minerals essential for renewable energy technologies. These materials, such as neodymium for wind turbines, lithium for batteries, and copper for electrical wiring, are crucial to the global green transition. By controlling these resources, China can influence the speed and cost of the energy transition in Western nations. Furthermore, China has secured substantial lithium deposits in South America and Africa and has established partnerships with countries in these regions to guarantee future supplies. This not only positions China as a dominant supplier of critical minerals, but also as a central player in the global energy landscape. Russia, on the other hand, has focused on developing small modular reactors, SMRs, which offer a flexible, scalable solution for nuclear power generation. Meanwhile, China is advancing in next-generation nuclear technologies like thorium molten salt reactors, MSRs, which are considered safer and more efficient than traditional uranium reactors. Together, these efforts represent a comprehensive strategy to control various forms of energy production, from renewables to nuclear power to traditional fossil fuels. This content is sponsored by companies specializing in real-world assets, gold and precious metals investments, renewable energy, and nuclear power. Energy control and geopolitical leverage. By gaining leverage over all forms of energy generation, China, Russia, and their BRICS Plus allies have positioned themselves to exert significant influence over the global energy transition. This comprehensive strategy allows them to control not just the supply of energy, but also the pace at which other countries can transition to alternative energy sources. If the Western nations wish to continue their green energy transition, they may have no choice but to negotiate with and depend on China and its allies for critical materials and technologies. Alternatively, they could turn to nuclear power, where they might again find themselves reliant on Chinese or Russian technologies, such as next-generation reactors or SMRs. This multi-pronged approach effectively traps Western countries between two difficult choices: remain dependent on the USD-driven global economic system and fossil fuel imports, or pivot toward a new energy paradigm where China and its allies set the terms. Implications of a gold-denominated market. Switching to a gold-denominated energy and commodity market would have profound implications. 1. Economic stability and predictability. A gold-based pricing system could offer countries more economic stability and predictability, especially those that have been vulnerable to the volatility of fiat currencies like the USD. This stability could encourage long-term investments, foster growth, and provide a more resilient economic environment. Number 2, shift in global financial power. A gold-denominated market would diminish the USD status as the global reserve currency, reducing the U.S. government's ability to exert economic and political influence through its control over the global financial system. This shift could lead to a multipolar financial landscape where different currencies and commodities hold sway in different regions. 3. Greater autonomy and long-term planning. Countries aligned with this new system would gain greater autonomy in their economic planning and policymaking, free from the unpredictability of foreign monetary policies and currency fluctuations. This would enable them to set budgets and growth strategies over decades with greater confidence, assuming stable trade in gold-denominated commodities. Challenges and opportunities. While the concept of a gold-denominated market is appealing, it also presents significant challenges. Implementation complexity. Converting the global oil trade and other commodity markets to a gold-denominated system would require substantial changes to trading, settlement, and regulatory frameworks. It would also face resistance from countries heavily invested in the current USD-dominated system. Market reactions and speculation. A shift to gold could prompt new forms of speculation in gold markets, potentially driving up prices and creating volatility. Moreover, gold is a finite resource, and any rapid increase in demand could lead to shortages or price spikes. Broader geopolitical tensions. A move away from the USD as the global reserve currency could be seen as a direct challenge to U.S. hegemony, leading to heightened geopolitical tensions or economic conflict. However, there are also significant opportunities. Resilience against economic shocks. A gold-denominated market could protect countries from economic shocks, inflation, and currency devaluation, making them more resilient to global financial instability. Geopolitical bargaining power. Countries that adopt this new system could gain considerable bargaining power in international negotiations, trade deals, and diplomatic relations. Conclusion. The potential shift to a gold-denominated energy market represents a masterstroke in the global chess game of power. By leveraging their control over critical resources, energy technologies, and geopolitical influence, China, Russia, and their BRICS Plus allies are positioning themselves as central players in a new global order. While this shift may seem radical today, it could emerge as a viable alternative to the USD-dominated system, fundamentally reshaping global power dynamics for decades to come. As the world watches this strategic maneuvering unfold, one thing is clear: the future of global economic and political order may look very different from the present.